Car dealers, your days are numbered and you know it, and I'm sorry, but that's a good thing. Let's discuss why you're so scared and what's coming next. I'm Brian. Welcome to my Tesla Weekend. So for a while now, I've been a subscriber to a car dealership guy. He's got a really great account on X, and he provides a lot of interesting information, and I wanted to go through some of it. But I figured, there are now more than 50,000 people reading it. His goal is to improve your experience reading it. You can give feedback, all that. So I did want to thank real quick some upgrading patrons, Bob, Rodney, David, and Ivor. You guys are the reason I'm able to do this channel, and I thank you so much for your decision to support. It's a tough go out here, and I thank you for it. So anyway, and you can support me on Patreon or X or YouTube as a channel member. It's very cool. And yeah, this list is a bit out of date. I gotta redo the whole thing. It's gonna be better. I'm working on it. So some of the insights that he provides are quite good. They show a neat peek behind the curtain. So updates, the Federal Trade Commission wants to ban fees, but maybe not for dealers. And here's why it's important, all that. It's generally a good newsletter. Here's an update on the strike. New car prices are down, all that good stuff. Again, some good insights. But then we get to this. And it's head-scratchingly bad. EV sales hit a record, but are things really sustainable? For the first time, EV sales in the U.S. jumped past 300,000 for the 13th straight quarter of growth. Q3 marked a 50% increase in EV sales year over year. That's good, right? That's a good thing. Let's break down the stats. EV sales, 7.9% of total industry sales in Q3. It's a record and a big increase. 50% of those third quarter EV sales were courtesy of Tesla. But FYI, that's Tesla's smallest market share on record. Shut ya. So here's the thing. No, it isn't. Why would you cherry pick the EV market and not the automotive market? Guy, check it out. All cars are going to be EVs. All of them. Very soon. Maybe they'll reverse some regulations. Look, it's over. It's done. This is a global phenomenon. It's happening. It is real and it is coming, and you know it. It's not an EV market. It's a car market. It's the automotive market. And if you start at about 80%, 100% of the mark, if you start at 100% and then sell 100 times more, but somebody else sells one, guess what? You lost market share. So come on. That's an abuse of math. And I think the reason is because it's courtesy of Tesla. They don't have dealers. They don't have car guys. That's something you need to work on, not us. Volvo, Nissan, Mercedes, and Hyundai delivered an increase of north of 200%, thanks in large part to new products hitting lots. There were 14 new EV models in Q3. That's a good thing. But they're not selling the same, are they? They're not compelling in the way Teslas are. And what you're missing is, when I bought my Nissan, it was a miserable experience. I wanted to pay full price, just give me the car. And I still had to go through all the nonsense, hours and hours of it, hostility. When I came back with my check, the finance manager threatened to take me outside and beat me up. What the? You have to fill out a credit app. You have to. I said, no, I don't. No, it's the law. No, it isn't. That is not a law. No, that's not. Why? Well, because we're going to try and beat that rate. No, you're not. You're going to try and match it. And then they come back and say, I need all this paperwork. I need your tax returns for 5 years. No, you don't. I'm already approved. That sounds like a you problem, my friend. When I ordered my Tesla, I did it in a video, live. Just boop, boop, boop. And we done. That was it. If that's your competition, I would be scared too. those cars are not selling. Something like a third of all Ford Lightnings ever built are still sitting on lots because they're just not compelling in the same way. All signs point to an industry that's shifting shapes. Yeah, but there's more to this transformation than meets the eye. Digging in deeper, reality check one. I'm just going to spoil it a little here. I think the reality check needed is for you. Even with all those records, the pace of EV sales growth has slowed. The buyers who really... Has the pace really slowed? Because you just said that it's increased massively quarter over quarter. Legacy guys are selling as many as they can. That's your job. And Tesla is selling as many as they can build. So if we're looking at percentages, that's neat, but it's a whole automotive market. Buyers who really wanted EVs, even at a premium, have already purchased them. Well, maybe you haven't been following EVs as long as we have, but this talking point has been around since 2018. Even in 2019, even in 2020, when Shanghai was ramping, we had people like Gojo saying, look, anyone who wanted one's got one. There's no more market left. Well, maybe we should make them all die at 100,000 miles. Nah, that doesn't seem like a good idea. And now dealers are trying to sell to a more hesitant group. You don't think it's because interest rates are up? You don't think it's because a lot of the EVs that are sitting on lots do not qualify for the federal incentive? You don't think it's because Polestar costs twice as much for the same form factor? It's like 80, 90,000. It's like 80,000, I think, 90,000 for a Polestar 3, or 50,000 for a Tesla Model Y, minus 7,500 bucks. Which one do you think is going to sell? Ridiculous. A huge chunk of consumers aren't used to paying north of 40,000 for a new car, especially given higher interest rates. The average price, and by the way, that is true. People aren't comfortable with it, but that's what cars cost. The first thing I learned in sales is, do you know what people buy? Whatever you are selling. It doesn't matter what it is. People are buying it. And if you can't figure that out, you're in the wrong line of work. The average price of a battery-powered vehicle was $50,683 in September. Right, but you're including the Audi e-tron, the Lucid, the Mercedes EQs, the Plaids. You're including there's a lot of very high-end electric cars that are still very popular. Pair that pricing reality with some range anxiety. We're still doing that. And you might understand why sales of hybrids, not EVs, are outpacing last year's numbers. That's not why. Hybrids qualify for incentives in many cases, and manufacturers are manufacturing them. If you make them, people buy them. Remember what I said a minute ago, how what people buy is what you sell. You have more to sell than you did a year ago, and a lot of them qualify for incentives, at least partial ones. So, is that the real reason? Oh, or is it because the sale of hybrids is what you sell? I think that might be part of it. It's a lot easier to sell oil changes on a hybrid than it is on a pure EV. It's getting silly. Reality check number 3. Auto companies have announced more than $110 billion in EV-related investments in the U.S. since 2018, but the prices they can charge for those EVs, see above, to make good on their massive investments in tech and manufacturing are headed in the wrong direction, and the strike doesn't help. The strike is only hurting the big three, and it is hurting them, for sure. We've seen delays in the Silverado. We've seen some layoffs in the EV Ford Lightning plant. This is a problem. But this is money that they have to spend either way. This is not something new or unexpected. What they can charge for, are you saying they're charging too much or too little? It sounds like you're saying both. These aren't reality checks. These are fantasies. EV prices fall. See, look at that. What they can sell the EVs for has gone down. You guys, it's gone down. Where all vehicles, going back, this is just 2023. Boy, I'd like to see this chart stretched out a bit. Yeah, they were charging 50. EVs were up. Boy, this isn't even a very big range. 48 to like 57, and now it's approaching parity, and this number is falling faster than this number. I can see why, if your job is to sell expensive things at high margins, this number would concern you, especially paired with that previous one saying they're not making money. This is an encouraging chart if you're an EV buyer, especially if you're an EV buyer who doesn't want to deal with car guys anymore. Still worth noting, the demand for EVs in the US is shifting, but it's still significant. Is it shifting? Is it? Did we notice that now? Just take China, which has been cut out of US EV manufacturing. Has it? Polestar's Chinese. The batteries in your Models 3 and Y standard range are Chinese. But Chinese battery makers are chasing deals with U.S. free trade partners, South Korea and Morocco, according to the Wall Street Journal. Right, but that won't get their cars in the door. To do that, they'll need to build factories in North America, which I would be very surprised to learn they're not already planning. They're taking the long way into America's EV market to capitalize on an industrial policy that heavily favors widespread EV adoption, even if it is going slow for a bit. So, the Chinese are absolutely coming. They are absolutely coming. There are a lot of people in America who don't realize this because we don't see that many Chinese cars. But in Europe, they know. And in Asia, they know. And in every other country around the world, all the developing nations, they know. This is still happening no matter what. The batteries are already coming. The battery factories are already being built in the U.S. It's happening. Bottom line, while growth in the EV space is still considerable, recent slowdowns suggest it may be time to temper expectations and invest in a future that includes a more smoothed out transition from combustibles to batteries. I don't share that conclusion. Now again, I like this guy. I appreciate his insights. I don't want to get attacked by his friends or fans. Please don't do that. But this is wrong on, well, all the levels I just showed. There's no reason to believe the vast majority of this. It requires you to engage in magical thinking, which is not helpful. Investing in slowing down and smoothing out the transition. The transition's here. We got the juice. We got the factories coming online now. We just got to do it. And it's unfortunate that the legacy guys are so far behind. They can catch up, but your job now is to sell those cars. And if they don't have the kinds of window etching and rust proofing and prepaid maintenance plans that make it profitable, maybe that's something that needs to change. And it sucks that Ford and others are looking for ways to get around the dealership model, but you did it to yourselves. You spent so many decades being just abusive to your customers, just treating us with absolute disdain. I couldn't buy a car at full price. What in the... Ridiculous. Ridiculous. What did I miss? What did I misunderstand? Leave it. Leave it into the comments below. Stay tuned and juicy, and I can't wait to hear from you, clever robots, in a world with fewer car dealerships.